Let's talk more about all of this, how the trade might work, the risks, and more. Joining us now, Susquehanna's co-head of derivative strategy, Chris Murphy, and KKM Financial CEO, Jeff Kilburg, both of them very well known for their current and former options focus. Chris, I'm going to start with you. You are an options guru now. First off, what's your just general take on this trade? And secondly, why do you think you would use options and not equity?
Hey, Brian. Well, you kind of hit the nail on the head. We do not have enough information about the specifics of these puts. And not only could they be expired, they could be way out of the money and be worth 10 cents. So, I think until we get more information, and if Michael Burry's willing to give more information, I would say that this is less aggressive than simply going out there and shorting the stock. If he's buying an out-of-the-money put option, that's the most that he can lose. Those notional calculations really overstate the size of these options because you're multiplying the size of the option trade times the current value of the stock. But once again, we don't know if he paid $50 or 5 cents.
Yeah, Jeff Kilburg, listen, and he's out there sort of on his Twitter account basically saying, watch out for fake news. The filings are correct. These are with the SEC, so I want to make that known. And we don't know exactly where things are right now. I think the bigger focus, and maybe Jeff speak to this, is this idea that Burry, who went against basically almost everybody in the world in 06, kind of doing that again. What's your take on not the mechanics, but the trade itself?
Well, Sully, you're right. And it was a great book, and it was an even better movie when he talked about The Big Short. He made so much money off that subprime. But remember, he was 2 years early in that trade, so he had some pain as there's associated decay in owning puts. But what's interesting, his big call, his big fade on Tesla in 2021, or when he just simply tweeted sell in 2023 about the S&P 500, we saw Tesla double from 2021. We also saw the S&P 500 up about 70%. I don't think Hollywood's going to call to make a movie on either one of those calls. So I want to be measured here. I think Chris brings up a great point. We don't know what the actual notional value, we don't know what he's hedging. But the 13F that you talk about, which is the SEC filing, it is very opaque. It doesn't give us expiration. He could be out of this trade. But nonetheless, going at Alex Karp and NVIDIA, bring a little Greek mythology into it, Sully. That's like going at Zeus and Apollo, the two AI gods, NVIDIA being the near $5 trillion god, and now Palantir, the new baby son of Zeus. We are seeing about 500 billion. So I think it's very aggressive that he's going at the AI gods in this manner. And I don't know why you want to short AI. You can protect, you can hedge, but trying to be short, I think is absolute bad idea.
Bat guano, I think. And by the way, Zeus and Apollo, also the name of Higgins' two Dobermans. That's right. Magnum. I mean, don't forget about that. Chris Murphy, how expensive would this trade be? If the people at home, for some reason, they wanted to follow Michael Burry, I'm not saying do that, but if they wanted to do it, how hard and expensive is it to buy options in these names that are puts against them, or even short the equity?
I mean, Palantir options are expensive. It's a high volatility stock, but once again, he might be long a put spread. Short puts don't show up on these filings. So, he could be long a $1 put spread for a nickel. So, we just don't know. I would say I would not want to be short Palantir. So if I was bearish on the stock, I would be using the options as opposed to just being straight shorted. But it is a higher volatility stock because of appropriate reasons. So it's going to be more expensive to buy puts outright.
So go back.